Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. Today, we're talking about Autoship expenses. All right, I had a great conversation with one of my new clients regarding auto ships. So I want to talk about that today because one of the things that I guess gets taught in the network marketing industry is that your auto ship expenses are tax deductible, and that is not always the case. So I want to talk about that to really clarify what the deal is with these auto ships, okay? So let's say that you have a product-based network marketing company, okay? Whether it is makeup, it can be hair, it can be wine, whatever, you have a product. So in that, you might order inventory. You might have inventory in your home to facilitate a quick sale. Hey, that's great. But the products that you use for yourself are not tax deductible, okay? The products that you use for yourself, your personal use products, are removed from your cost of goods sold. So, yeah, as a if you're using a product, you got to be a product of the product. You got to use your product in order for you to be able to sell to your clients, tell your client how it works, tell your clients the best way to use it, all of those things. And if you are a walking billboard for your products, hey, that's going to help you sell, especially if you're in the health and wellness industry. However, but the products that you use for yourself are not tax deductible. So let's say, for instance, that you have a $40 a month auto ship. Okay, so you have products, you spent this $40. Now, if you turn around and sell that product, sell the product to someone else, that is a tax deductible expense. What you paid for that product is your cost of goods sold. That is tax deductible, and you pay taxes on the profit that you make. Okay, so if you have a $40 product and you turn around and sell it for $80, for instance, then that $40 is deducted as your cost of goods sold, and the $40 left over is your profit. All right. But at the same time, if you take that same $40 worth of product that you ordered, but you use it for yourself, that is no longer a tax deductible expense. It goes to your personal use, and that is removed from your cost of goods sold. So, so you have to understand that any type of product that you may order in bulk, whether it's for your auto ship, like I said, whether or not you keep inventory, whatever you pull from your inventory to use for yourself or in your home, those things are not tax deductible. Okay, that's just that's the long and short of it. And the same goes for services that you purchase. So let's say, for instance, that you have, a bookkeeping MLM, okay? You have, you purchase bookkeeping software that you use half of it for your business, and you use half of it to track your personal finances in your home. Well, only the part that you use to track your business that's the only part that's tax deductible. What you use for your personal finances is not. Okay, so when you're talking about your, purchasing your products for your MLM, you have to keep track of the amount of products that you use for yourself and the amount of the products that you actually sell. You have to know these things and separate these things out. If you look at your Schedule C, as a matter of fact, okay, we about to get busy for real. Hold on, we're gonna pull up the Schedule C. I ain't even plan to do that, but we're gonna do it now. All right, we're going to pull this up, and let me share my screen real quick. All right, so I hope that you guys can see that. So I'm going to scroll down here, and here we go. Now, so here you have your inventory at the beginning of the year. So if you keep this is not an inventory lesson, but just to let you know that you have to keep track of your inventory at the beginning of the year and at the end of the year. All right. So then you have purchases less cost of items withdrawn for personal use. So if you purchased $1,000 worth of product and you used $200 for yourself, then you can only claim $800 here, not the $1,000. All right. So I really want you to understand that this is not something, that you can't deduct that. I have seen pictures from other, different types of MLMs. One of my favorites was the wine MLM, where there's people, they're showing like they're walking into a liquor store and they're saying, oh, I wonder what tax deduction I'm going to try today. It's not a tax deduction. That is a personal use item, and that's not tax deductible. So when you're purchasing your products, you have to keep the track of the products that you purchase, but you also have to keep track of the products that you use for your personal use and subtract that out. Okay. You got to be clear on this. That is all. So when you are, now at the time of this video, we're going into the fourth quarter. Now is the time for you to go back and look through your purchases, see how much of the products you have purchased, which of those products you sold, which of those products that you use for your personal use, and you need to subtract that out. It is not all it's not all tax deductible. And so when you're talking about getting audited, if you've got a product or service and you have the personal use products at zero, then IRS auditors are saying, okay, well, if you don't use your product, how do you sell it? How do you tell your clients how to use it? And I even had that with a client who was a cosmetics consultant. And I asked her, what amount of your personal use? She's like, none. I don't use it. I just sell it. And I was like, okay, you won't be in business for long, because if you don't use the product, how you going to tell other people how to use it? That makes zero sense. Okay. And the amount that you subtract also is the amount that you paid for it. It's not the value, the resale value, the market value is what you paid for it. So if you have a $40 product that you use that you would normally sell for $80, okay, well, that's great, but you only get to you only get to subtract the $40 that you paid for it. Okay. And you have to do that. So this one is a short and sweet one today, you guys, but this is really important, because if you wind up showing that you're deducting all of this product and there's no personal use product, that is going to throw up a red flag, because that's one of the things the IRS is saying. Well, how are you promoting a product that you don't use? And especially if you're not making any money. Okay. Let me also say that if you're losing money and you're investing in these products and you don't have any personal use products, then the IRS saying, okay, well, this makes sense that you're not selling anything because you're not using it. And so again, you just have an expensive hobby, right? So this is the time, if you're in the network marketing industry, if you have a product or service based MLM, then you need to go back and look at your purchases and determine how much you have actually purchased overall, and then what amount of that product you have actually used yourself. All right. So I hope this helps you out, you guys. Let's get this accounting part right, because it's important. Okay. So thank you guys so much for tuning in for today's episode of Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock-ish, and you can come here to get your questions answered about your home business taxes. All right. Have a great day, and I'll see y'all next time. Bye.